Hi everybody, this is Tom Stubbs with Remax Equity Group. Today is October 23rd. I'd like to kind of jump into the numbers from September to give you an idea what's been going on. I missed last month, so I'm going to kind of try to get through a lot right here and kind of share some information that I was kind of looking at that I think is really good news as far as a positive sign what's going on in the broader financial markets and how that might be helping interest rates going forward. So with the data that we have for September, what I'd like to talk about is pending sales compared to 2024 were up 3.3% in September, and closed sales were up 7.2%. So I think that's a real positive sign that the market's starting to move more in a positive direction. Another thing I'd like to talk about is the year-to-date numbers. And those year-to-date numbers, both closed sales and pending sales are up 1.6%, which isn't a huge increase, but if this positive trend continues, I could see those numbers climbing above 2%, hopefully before the end of the year. Average days on market is continuing to climb. We're at 63 average days on market so far this year. Last year that number was 54 days. So it's taken a little bit longer for homes to sell, a lot more price reductions, a lot more homes sitting on the market for a little bit of time. So we're kind of seeing that, but I think they're starting to turn over a little bit. So the broader financial news that I wanted to talk about has to do really with the 10-year Treasury and how that is impacting mortgage rates. A lot of people will look at what the Fed is doing, but the Fed doesn't directly influence where mortgage rates are. It's much closely linked to the 10-year Treasury. So if you look historically, usually the gap between the 10-year Treasury is about 1.9% or even a little less. We got as high as about 2.4% just in the last 6 to 8 months. So that's a dramatic difference in where mortgage rates are. Well, when I checked it this morning, the difference between mortgage rates and the 10-year Treasury was only 2.19%, which is actually a dramatic change from where we were. If you were to use that 1.9% multiplier and apply that to the current Fed rate, the 10-year Treasury rate, which is 3.99%, rates should be at 5.89%. So once again, they're at 6.18%, which is a pretty dramatic difference. So what I'm seeing is that gap is kind of narrowing, and if it continues to narrow like that, I think we will easily be getting into the 5% interest rates here in the future. To give you an idea as far as how high those rates have went in the past, they've been over 4% at some point of the spread between the 10-year and mortgage rates, and they've been as low as 1.1%. But like I said, historically they're about 1.9%. And I think that's a great sign that we're getting closer to that number. So I think we're going to get mortgage rates that are even lower. So if you really want to get a feeling where mortgage rates are going, I suggest don't watch what the Fed's doing, but watch what the 10-year Treasury is doing. And we just got below 4% recently, and if that continues to fall, I think mortgage rates are going to move with that as well. So anyway, I hope that information is not overwhelming for you. I hope it's useful. If you have any questions about this information, your neighborhood, buying or selling a home in Washington or Oregon, give me a call. Once again, my name is Tom Stubbs with Remax Equity Group, and you can reach me at 503-869-4744. Have a great day.